On a really bad note, the rand losing so much ground against the dollar, and some analysts attribute this to government failure, the country's institutional inefficiencies, but of course there are also many other contributing elements that are beyond our control that I think were attributed to the effect on the currency at the beginning of this month. Let's talk a little bit more about how South Africa, being an emerging economy, is susceptible to global trends that bring setbacks to the gains of these economies. So talking to us now, we've got Isaah Mhlanga. He's an executive chief economist at Alexander Forbes Investments. Good to have you. Welcome to Morning Live.
Thank you, Leanne.
So in the introduction, I'm not sure it's fair to attribute what's going on with the currency right now to issues internally, or can we?
I think we have a tendency to be overly pessimistic as South Africans. We attribute a lot of what happens in our currency markets or in our bond markets to domestic factors. But in actual truth, over 60% of what happens with the rand or in our financial markets is driven globally. If you look over the past week, issues about Turkey, we would know very well Turkey's debt have increased quite significantly, particularly foreign debt. The current account deficit also ballooned quite significantly. And as a result, when the Fed starts hiking interest rates, you have problems in Turkey. But because it is an emerging market, which we are also categorized as, we get impacted through contagion. If you look at financing needs of emerging markets, it's Turkey, it's Argentina, it's India, it's South Africa in terms of the size of financing needs. Yeah. So every time there is uneasiness in emerging markets, we also get impacted.
Yeah, which is a big concern, because I mean, when you're in that basket of currencies, it's the one sneezes and everybody else gets the flu, and that's kind of what we're seeing. But the big focus, and if we could perhaps just talk about them for a little bit, everybody attributing this to the fall of the Turkish lira and the issues between America and Turkey. Some even saying that this may be due to a misunderstanding. I don't know. Help us out here. Let us understand what is going on with the lira and Turkey. I mean, we're seeing it's lost almost 46% of its value this year.
Fundamentally, Turkey's macroeconomic imbalances are out of line. If you look over the past 2 years or so, foreign debt has increased quite significantly. But also, this is to the private sector, which meant that when interest rates start to rise in the US, the debt repayment costs also rises. But this has also been combined with policy incredibility. In actual fact, we had the president of Turkey taking over monetary policy, where he doesn't allow the central bank to hike rates as it should in order to stabilize the currency. So a combination of bad macroeconomic imbalances plus bad policy response to those imbalances combined to weaken the Turkish lira, which then impact other emerging markets. But I think what is important for other emerging markets or for South Africa is we don't have significant direct exposure to Turkey from a trade perspective or from financial linkages perspective. The only channel that is going to flow into South Africa is through the euro. Turkish banks or corporates have a big exposure to European banks. And every time you have a euro depreciating, it ordinarily impacts emerging markets.
And we did see the euro taking a bit of a hammering as well on the back of the news of the Turkish lira. Let's talk BRICS for a second, because you know, many of the countries that you've alluded to are these emerging markets, and Turkey also invited to the BRICS summit that we saw being held here in South Africa and aligning itself with BRICS. And, you know, one wonders about the grouping of these countries and how they work together. Yes, of course, in good times it's fine, but in bad times it seems that everybody gets hammered and dented in their economies by this. So let's talk of BRICS and whether there's any buffer that's on offer from these countries to outside forces as we're seeing this week taking place.
I think if you look at the size of the economies, if you look at China as the second biggest economy, by 2030 it will be just the same size as the US. If you look at Brazil, you look at Russia from a population point of view, that is the size of the market, they're quite significant in the global economic space. From 2015 to where we are currently, they have managed to improve their macroeconomic indicators. If you look at debt, for instance, They have almost reduced by 10 percentage points from 2015 to where we are. So this time around, they're in a better position to deal with any shocks that come from the global financial system. But I think the biggest issue that we had since the beginning of this year has been the tariffs from the U.S. against China, and also from the U.S. against NAFTA countries, which are Mexico and Canada. That has been introducing a lot of volatility in financial markets, and that is going to continue for some time. We don't know when it's going to end, and the Turkish issue as well has been sparked by tariffs that have been imposed by the U.S. on Turkey. And this morning, Turkey also retaliating. So we are in an environment where we see this anti-globalization move, where countries are imposing tariffs on each other's trade, which has proved historically that is bad for global economic growth. But for the BRICS nations, I think they are in a better position to deal with any shocks.
I want to just talk about the impact on fuel prices, because that's, that's bringing it really home, and something that is affecting everybody. We're seeing food prices going up. Filling up your car these days is one of the most painful exercises, because you just look at that petrol gauge and the amount going higher and higher and higher. And, this is the reality that hits everyone. Now, we were hoping come September we weren't going to see another petrol price increase. However, the way things are looking, it certainly appears that way. What are your views? What are your expectations?
I think if you look at the two things that impacts on the fuel price, is the price of oil, is the dollar-rand exchange rate. Yes, the dollar-rand exchange rate has weakened quite significantly on the back of problems in Turkey, but our expectation is that it's going to come back because it's fear-driven. Fundamentally, we are starting to improve, although at a very slow pace. The improvement was not going to be fast in any case, because it takes quite some time to turn around an economy. So we expect the currency to come back somewhere between 13.50 and 14. And as long as it stays within that band and the oil price declines or remains where it is, we are unlikely to see the same size of fuel price increase that we saw over the past couple of months. But from an inflation point of view, which is another channel that hits the consumer directly, we are unlikely to see inflation increasing above 6% for the next 12 months or so, as long as the currency remains stable within 13.50 and 14, and the oil price does not increase above 80. Our analysis shows that inflation is going to remain contained for some time.
Okay.
But it does mean that we should not expect any fuel price cuts going forward. So the relief is not going to come.
Yeah, the relief is not going to come. But this morning, I think we're sitting at about 14.30, somewhere around there?
That's correct. We're sitting at 14.20, between 14.20 and 14.30. It's still very high. Of course, the news about Turkey has not yet settled down. Until Turkey perhaps gets an IMF bailout, or they do the monetary adjustment by hiking interest rate, which we expect to be anywhere between 5 percentage points to 10 percentage points. That's the required interest rate hikes for them to stabilize the currency. Until we see policy credibility returning to Turkey, we are going to continue to see volatility in Turkey, and by implication, it's going to reverberate in emerging markets, including ourselves. But over the next couple of weeks, we expect this to recede in other EMs outside of Turkey.
Thank you. Thanks so much for talking to us and coming and giving us a bit of an explanation as to what's been happening this week. Remember, during the early hours of Monday morning, I think it was about 1 o'clock in the morning, we saw that currency hit about 15.50. Am I correct? About
you're correct.
Somewhere around there. It was just insane. It was frightening to watch, but it has subsequently recovered, but still not enough. So let's keep our eye on that. Thanks so much again, Isaah Mhlanga, who is the Executive Chief Economist at Alexander Forbes Investments.